Hey guys, this is Alex from MarketWise Asia. I am just back from Perth, and yes, the one that you are seeing in the picture right now is me taking a picture with Waterby. So I was in Australia, Perth, from the 20th of May. So I was there for about 10 days with my family. Went to a lot of places. And by the way, this is the Caversham Wildlife Park. So it's a good place for the family and for kids as well. So coming back, in Australia and Perth, right, weather was very cooling, less sometimes, about less than 10 degrees, or most of the time it's about 15 to 20 degrees, that kind. Back to Singapore, the weather is really warm, okay. Yeah, the weather is still very warm in Singapore, so still getting used to the weather over here. And during my time in Aussie, okay, I didn't really trade a lot, so didn't really look at the market as well. I was asleep pretty fast at night because I was very tired for the whole day, and such. A lot of things happen in the market. So let's go through the market with you, shall we? Okay, so we won't spend too much time, just give you an overall broad view on what I think of the market is doing right now and what will happen or what could happen, okay, within the next 1 to 2 weeks or so. So as usual, a disclaimer first, okay, whatever I share today is just for education and information purpose. It is not a recommendation for me to tell you what to buy or what to sell. So please do your own due diligence, and as usual, okay, subscribe to our various social media channel, and of course our Telegram channel. It is meant for price mover, market updates, and some of my updates and such, okay. And YouTube channel, of course, most likely you're watching this on YouTube. If you're watching this on YouTube, please give us a like, okay, and also subscribe to our channel as well. So next time, in case you didn't get updates, at least you might get an update from YouTube, okay, when you subscribe to our channel. And of course Twitter as well. A lot of times I post new trade ideas on Twitter, okay. So do give us a follow, okay, on these various social media channel. You should be able to see all this link, okay. If you're watching this on YouTube, you should be able to see it in the description box, okay. If you're watching this on Facebook, okay, you should be able to see on the first comment, okay, of the video over here. So let's get started over here. So of course, the market has been rallying, okay, since the start, since for the past 1 or 2 weeks or so. If you remember, actually before I fly, okay, I actually was quite bearish on the market, okay. I was wrong, okay. Yeah, as in, because I'm not God, I don't know what will happen. So I was pretty bearish, thinking that there could be a correction, but the market actually proved me wrong, especially the Nasdaq. The Nasdaq actually surged even higher. Where is my, let me try to get this over here, okay. So the Nasdaq, in fact, actually surged much higher over here. So actually, if you remember what I mentioned, or some of these key stocks that I mentioned, like for example, like Microsoft, okay, like MSFT, okay, I mentioned there was a star signal, okay, price could do a correction, okay, but it never did, okay, and price actually surged higher. And what else? Apple also, like for example, AAPL Apple, okay, Apple also, in fact, I thought there could be a correction. This was my star signal over here, but indeed price in fact went a lot more higher also. And of course, what else? Amazon also, all these mega cap stocks, okay, also went a lot higher as well. Okay, so this was my star signal. It also went up quite a bit over here. And of course, the darling right now is Nvidia, okay. All right, so can see that it gap up quite a bit, okay. Yeah, so all these mega cap stocks right now, it looks a bit too extended to me. So I'll share with you my sharing analysis later on, okay. So I saw this on, let me see where this picture, not this, okay. Where is it? Okay, so this I get it from Dr. Wealth over here. I think Alvin posted from Dr. Wealth. So he mentioned that the average return of the S&P 500, okay, components, okay, year to date, okay, if you invest in the top 5 largest, basically this is a top mega company, and this carries a lot of weight in the S&P 500 index, okay. Just invest in this largest 5, okay. All right, so you get a 61% whopping return, you see, okay. All right, top 10 40%, largest 20, 27%, largest 30, 19%, largest 50, 13% only. So if you invest, okay, in the whole S&P 500, you only get about 10% return, which means that, okay, the smaller cap company are underperforming the big cap and the mega cap. And a lot of times, okay, based on historical data, in fact, you know, over time, okay, the RSP, the equal weight index, will outperform the S&P SPY index. But this year is a bit different. In fact, the main driver of this rally is in fact the mega cap stocks. And you need to understand that, okay, just now the stocks that I mentioned to you, like for example Apple, Google, Amazon, Microsoft, Nvidia, they are in fact the index. Why do I say that? Because you go to this slickcharts.com over here, you can see that, you know, the component of the S&P 500, there are 500 stocks out there, okay, in the whole list of this S&P, okay. All right, we can see that the Apple, Amazon, Microsoft, Nvidia, they took a huge chunk of the weightage, okay. For example, Apple is already about 7.5% of the whole S&P, Microsoft weightage about 7%, Amazon is about 3%, Nvidia is about 2.8%. Google Alphabet is about 2%. So all these, they are the index that are leading the market. And if you are looking at the, you know, heat map of the S&P 500, this is from finviz.com. So for the past 1 month, so actually what do you see for the past 1 month over here? Okay, I try to just zoom back down. Oops. Okay, you can see that, you know, many of these mid cap, small cap, all right, they are actually in red. Okay, they are negative for the past 1 month. It is the mega cap stocks like Microsoft, Apple. Okay, Microsoft is up about 7.5%, Apple is up about 4.5%, you know, Google is up for 15%, around 15%, Meta, Facebook is up about 9%, Amazon 18%, Tesla 26%, and Nvidia, okay, is up about a whopping 30%. These are the driver of the rally. So it gives you an illusion that the index, the market is actually doing pretty well, but actually it is not really. Okay, it is not. The mid cap, small cap, okay, they are actually not doing very well. So later I will show you the chart as well. And of course, you know, based on historical data, you know, we are heading into June, and right now, as I'm recording this video, today is the 1st of June. I'm recording at 3:40 p.m. Oh, by the way, right, I forget to tell you, all right, because, you know, tomorrow is actually a public holiday, Vesak Day in Singapore. So it is a Friday. So once again, I won't be doing a Facebook Live because it's a holiday. I'll take a break also, and that's why I'm doing this YouTube video for you. So for the past, you know, for the past 3 weeks, you haven't watched Facebook Live from me. I hope you guys miss me and also miss my voice also. All right. So yeah. So just let you know that. So I won't be doing a Facebook Live tomorrow, and you can see that, you know, this is the return of the index for the past 1 month. Okay, and as I mentioned, leading into June, historically it is not the best month. So this is the S&P 500 seasonalities of the S&P 500. Okay, you know, exclude this year, so just shift back for 15 years, you can see that, you know, in fact, April and May is actually not a bad month. So May is actually in fact a good month, and this has been proven to this year 2023 that May is a good month for the big cap stocks. Okay, and of course, you know, I'm not saying that June is a bearish month, just as it is not performing as well as the rest of the other months as well. Okay, so it is pretty neutral. All right, if you actually, you know, play around with the number of years, okay, for example, like maybe shifting to about 18 years or so, can see that, you know, historically, you know, June, August, September, they are the weaker month. July is actually the stronger month. You know, this is the June is the weaker month. So I won't be surprised that heading into June, okay, which is the start of the month over here, we could see some correction, because, you know, if you look at some of the stocks, especially the mega cap stocks that I mentioned, right? So for example, Nvidia, they looks a bit overextended over here, okay? And this is the daily chart for Nvidia, and looking at the weekly time frame, you know, it looks just a bit parabolic over here. So if you are, you know, happen to be inside Nvidia, you know, I'm talking in terms of swing trading or position trading where you hold for a few days, or you're holding for a few months, that kind of generally less than a year. If you're holding NVIDIA, I think it is a good time for you to take some profit off the table. Okay, it is pretty parabolic. Of course, I'm not saying that you'll crash. I think it's a good idea to sell into strength. Okay, exit when you can, not when you need to. Okay, of course, asking me, how will NVIDIA perform for the next 2 to 3 years, 5 years? I have no freaking idea because I'm not a long-term investor. But if they're talking about short-term trading, shorter-term trading, I think that, NVIDIA, it is a bit parabolic. Okay, it is good to take some profit off the table. Okay, you can take 1/3, 50%, half, whatever it is entirely up to you. Okay, all right. And if you're looking at this, my seasonality table over here, actually, this is based on stock charts over here. You can see that in June, actually, it is not a very bullish month rate, okay, which means that 40% of time it is positive, that kind of thing. Okay, so a lot of sectors, they are not doing very well. And if you look at the equal weight one, okay, it is pretty bearish also. So historical data tells us that June is not a very good month, but it doesn't mean that you go down it definitely in June. I want to just tell you that because this could be exceptional month. Okay, it's a different year, that kind of thing. Okay, trends could change, so it doesn't mean that. But we have to be careful. Okay, I hope you understand what I'm trying to say. Okay, it doesn't mean that the market will crash, but I want you to take note that June is a historically bearish month. Okay, or less bullish month, so you need to take note of that. Okay, and as I mentioned over here previously, before I fly, okay, I actually mentioned that the RSP versus the S&P 500 index over here. Okay, all right, you can see that ever since that price actually broke this channel over here. All right, so this is the RSP versus SPY, the equal weight S&P versus the S&P 500, which means that if the the ratio is dropping over, which means that the smaller stocks are underperforming. Okay, the big index, which means the main component stocks over here. Okay, all right, so the main stocks are not doing very well. Okay, and if you look at the Nasdaq, okay, it has been flying all the way. Just like I mentioned, really pretty good. Okay, all right. And for the S&P 500 futures over here, not as good as the Nasdaq, but generally you can see that it is also heading higher over here. Okay, and then for the Dow, all right, Dow is actually the weaker of the 3 indices. Okay, it is actually coming down. All right, and you need to take note that right now, this month, 1st of June, we have a new central pivot range. So you can see that for those who don't know about central pivot range, okay, every single month, okay, there will be a new central pivot range, which is derived from pivot point. So you can see the past green lines over here. This, I think, at the support and resistance over here. All right, so right now we are just barely above the central pivot range for the month of June over here. You can see the 3 dotted line over here. And for the Nasdaq, okay, we are still above, but it's a little bit overextended. And of course, for the Dow futures over here, you can see that we are already below the central pivot range already, which means that when price rally above, I expect some strong resistance at the area, which is at about 33,300. okay, which is at about 33,300 area. Okay, 33,300, about there, okay, 33,300 area over here. Okay, so be careful on that. And if you look at the small cap, okay, they are also not doing very well. This is the Russell 2000 futures over here. Price has been pretty much consolidating for the past 1 month or so, and of course this month is the new month, and we are also right now below the central pivot range, so do be careful on that. Okay, and if you look at the RSP, the equal weight index, okay, you can see that price is actually below the cloud and also the central pivot range. I believe today it will be below the central pivot range, because this is so-called open at night, okay, as in Singapore timing. So tonight when the market opens, you have a new central pivot range over here. And if you actually subscribe to my Twitter, okay, all right, you follow me on Twitter, I actually mentioned that, you know, I think I posted this on the 30th of May, which is I think yesterday or 2 days ago. All right, okay, that the RSP, which is over here, can you see over here? All right, I said I'm back from Perth. This is on the 30th of May over here. 30th of May is actually, oops, 30th of May. On Tuesday, okay, on Tuesday over here, okay, on Tuesday. All right, so I mentioned that the key indices are making people FOMO, and the equal weight S&P, all right, for RSP, the price action doesn't look good, and we are heading into June, okay, and I don't like the hammer candlestick pattern. This is the hammer candlestick pattern, and it feels like bull trap. A lot of times when people see this hammer candlestick, you know, they tend to go long, especially those amateur traders who just focus on, you know, that kind of candlestick pattern, which I don't really like. Especially the more obvious it is, okay, the less chance that, you know, it will work out, okay. And this is especially true if you look at the S&P 500, the RSP, can see that, you know, price actually, you know, this I mentioned, this is the hammer candlestick. This is the hammer candlestick pattern, right? Somehow just cannot work, okay. This is the hammer candlestick pattern over here, okay. And then it had a bull trap, that kind of thing. And yesterday price actually, you know, hunted the low of the candlestick over there. And in fact, I shorted on Tuesday, or I shorted on Tuesday itself. So I'm still holding on to my position. I'm in profit, okay, but of course yesterday towards the closing, price actually reversed back up a little bit, so I will see how it goes. But again, it doesn't mean that, you know, price will, you know, just go down like that, okay. But overall, my view is that there could be more, you know, some bearishness ahead, okay. Price will just ping pong like that or head down lower, so we shall see how it go. But most likely I will shift my stop to my entry price, so that, you know, even if it cover back up, okay, I won't lose any money from that position. So please don't copy me. If you shorted, you want to short today, okay, all right, you are a bit too late already. So this is just my view, okay. So don't copy me, okay. Most of the time I'm always a little bit earlier, okay, all right. So yeah, I've already in some profit, okay, but I will protect my position. So I hope you guys understand what I'm trying to say over here. So overall, okay, my view is that the market, it is a bit overextended, especially the Nasdaq, okay. All right, short term wise, I think there could be some correction moving forward, okay. There should become some correction moving forward, especially the mega cap stocks, the S&P, okay. I think it could come down a little bit also as well, okay. The Dow already also not too good already. It's already below the central pivot range. Let's say if price we do rally a little bit, okay, you hit the central pivot range, okay, and that could also spell trouble for the S&P and the Nasdaq as well. But overall, okay, this is just the short term for the next few weeks or so. But if you're talking about longer term, okay, within the next quarter or so, within the next few months, I think the market, it is still pretty okay. As you know, I don't think we will, all right, go below the October low over here. All right, so I'm talking about until within the next few months, so until maybe third quarter, okay, third quarter. The reason why I'm saying that, it is because I'm looking at the market internals as well. So the market internals that I'm looking at, I mentioned before also, this is the VVIX over VIX ratio, okay, VVIX over VIX ratio over here. All right, so I'll move back to the line chart over here. We can see that the market, okay, this is the S&P 500. It's kind of generally going a little bit higher, okay, but you can see that the VVIX over VIX ratio is heading down. So short term wise, okay, I think there could be a correction. But longer term, as I mentioned, within the next few months or so, within until the next third quarter, until maybe September or so, okay, I think the market could still continue to head higher. One of the reasons is because, okay, all right, the VVIX ratio has already surpassed the high over here. You can see this was the high, okay. The market is still struggling to go higher, okay, but the VVIX ratio has already surpassed the high. So I think the market overall, okay, mid-term wise, I think is still okay, but short-term wise, okay, I think that could be due for some correction, Okay, so this is my overall market analysis. I hope you understand what I'm trying to say, and I wish you guys have a very good holiday ahead. Alright, and of course it's a June holiday. Have fun with your kids, okay, and have a good weekend ahead. Alright, thank you so much and have a good weekend. Bye bye.